What's going on, everyone? The market marched higher yet again today as around 64% of stocks in the S&P 500 finished in the green, but it was definitely a choppy day today, to say the least. A lot of the movement actually happened in pre-market, similar to what happened yesterday. And while this can make for a harder trading environment, what ultimately matters is how you adapt to it. So in today's video, we're going to talk about how to adapt to this ever-changing market and some other important things to know heading into the market tomorrow. Reddit just reported earnings, and they're kind of going crazy in after hours. And we also have some pretty exciting updates with Apple as well. So stick with us all the way until the end. And besides that, Tom, let's jump right into it.
Yeah, the market wasn't really, it was hot today. Like there was a nice move up. You can see it closed up only 0.11% though on the SPY. There was a pretty bad pullback at the end of day after marching higher a lot throughout the morning. But the big thing was, Mike, the SPY really rejected its resistance. Like that 518.25 to 518.50 area really held up today. And the market failed to truly have a good breakout. So heading into tomorrow, I think everyone's going to be watching that as well as this support down around 516.50, kind of like a little channel that started to form here on the SPY. And I think that some of these earnings and some of the events like the Apple one that we're going to talk about here soon will kind of dictate what's going to happen. But one thing that is going to not necessarily move the overall market, but it's definitely fun to see here is Reddit's earnings in after hours. And Mike, they are up quite a bit, ran all the way up to $60 a share. It looks like the earnings came in very hot here. So revenue increased 48% year over year to 243 million. Their EPS wasn't as bad of a loss as expected, came in at 8.19 versus an 8.71 loss expected. Don't get confused by that. Some people might, because it's a higher number on the loss side. But either way, Mike, this is pretty good earnings here for Reddit, which is a new company that just recently IPO'd. So with them IPOing in March and starting to see them push back up here, I mean, they're going to have a nice gap on the chart tomorrow morning if they can open this high around 56. So looking pretty good here after the Reddit IPO.
Yeah, and they reported higher daily active users than expected and a higher average revenue per user. So that's always a good sign, but what ultimately matters is the way in which the stock is moving. And as you said, they've been doing pretty well in after hours so far today. Keep a close eye on them for tomorrow for a potential earnings continuation. But, what will ultimately make or break a setup like this one is the level of momentum we see towards open. If the stock opens up tomorrow and it is just ripping to the upside and everyone is crowding into the stock, then there's the potential for that like snowball effect of a, momentum style trade. On the other hand, if this stock opens up tomorrow and it's not really moving too much, or if it's just weak, that'll kill off a lot of the momentum that it has, and it'll definitely take some of the buying pressure away. So with this one, there's potential, but you really have to gauge the momentum around open because it's more important than you think. But while Reddit had a pretty nice move today, another stock that reported earnings didn't, and that was Disney. So what's going on with this one, Tom?
Oh, man, I actually love Disney for the long term, so I am a little sad to see him down with earnings, but at the same time, I think it'll provide a good opportunity to continue to buy into more shares here. But as you can see, it was not the best move, Mike, down 9.51%, I think close to 10% at the low of day there, but it wasn't the best earnings here. Now, I will say this, whenever I start to look through here and look through everything, it's not necessarily terrible, right? Like they say, streaming is nearly break even, but the shares are sinking on soft guidance. The big thing is like, are they going to be able to like change this and turn these woes around? Like they've been taking a pretty bad beating here in the short term for a little while. So to see them, have this big negative reaction to these earnings is definitely not a good thing. So, Mike, whenever I see Disney here, you see the EPS, it actually beat. The revenue came in just under, but pretty much right at the expectation. So it wasn't terrible there. The big thing is really just the guidance. So I'm really hoping that Disney can turn that guidance around over this summer. And I think that there's potential with Iger still taking over. I don't necessarily think that they're going to, end the year in such a negative note like this.
Yeah, it was definitely a rough day for Disney, but either way, keep a close eye on it as it has been moving up in a pretty strong way since like November of 2023 or so. But Disney normally has some pretty big swings in both directions. But another stock that had some interesting news today was Apple, and they had some new updates, especially related to their iPad. So what's going on here?
Yeah, Apple didn't necessarily explode up as much as I thought that they might with such a large event like this, but Tim Cook actually said that this is the biggest event for iPads, or like the biggest day for iPads since its introduction, is the exact quote there. So that's a big thing to say whenever Tim Cook says that. Do I think it's the biggest? Maybe. I think it's arguable, but they are releasing a lot of cool stuff. So the big first thing is they are starting out with the iPad Pro. Okay, it starts at $999. The 13-inch model costs $1299. That's a pretty hefty price tag, but they're actually putting some really good chips in these, like their M4 chips. And their whole goal with this is to get the iPads to feel just like a MacBook. And I think that's a very smart strategy by them. You can actually buy these magic keyboards that connect, and pretty much it turns into a MacBook. So I actually really like this, Mike. Honestly, I've been looking into MacBooks. I might have to pick one of these up because it seems like a pretty cool deal. You know, you can take it around a lot easier and etc. But they also announced iPad Airs as well, new updates to those models. They're coming out with a 13-inch model for that, as well as the 11-inch, and they're going to use the M2 chips in those. And of course, they're going to be cheaper, starting at $599 and $799 for the larger one. So that's pretty good. At least those ones are more affordable. But once again, Mike, you know, Apple comes in with these high price tags. I'm sure a lot of people are going to roast them in the comments.
Yeah, so the stock didn't really move too much off of this news, but it has been holding up in a pretty good way from their earnings last week. Apple's one of those stocks that, of course, is a powerhouse, but it has definitely been lacking a lot of the momentum that it used to have. And relative to other big tech stocks like Meta, Microsoft, Nvidia, Netflix, and others, Apple has just been kind of stuck in the mud for the past couple of years. So keep a close eye on it because it has been slowly regaining some of the momentum that it used to have, but it still has a lot more work to do. And if it can't regain that momentum, that's fine, but it's just starting to show just some small signs of, to move in a big way. But as we look at the market right now, it is safe to say that the current market is a lot different than the market we saw 2 weeks ago, and it's a lot different than the market that we saw a couple months ago. The current market is a lot more slower moving and a lot more choppy than the market was, a couple months ago, and there are multiple reasons for this, but the main thing is that you have to trade in a different way given different market environments. So what you'll notice is like when the market was at its high of day today, it didn't just fly to the upside like we saw it do a couple months ago. It was a lot more choppy. There was a lot more resistance, and the movement was a lot slower. So in these situations, it is more important than ever to, obviously be more careful when stocks are at their high or low of day, but it's also more important to be deploying multiple strategies. So when we see days where the market, let's say, has almost all of its movement in pre-market and after hours, that will still work for you. Especially over the past week, a lot of the movement has been happening when the market is not even open. So if you're someone who strictly day trades, that limits you quite a bit. So if you consider, having some swing trades, having some longer term plays, shorting some put options, and doing multiple other things like that, it will make the trading process a lot more smooth. So keep that in mind going forward, because I see a lot of people struggle when market environments change, and that's also normal because it's not like market environments just change from one day to the next. Like they're like a slow process, and the most important thing is recognizing the change and adapting to it in a smart way. So I just wanted to throw that out there because it's very important.
It really is, Mike, and I think it's even important to change your intraday strategies up a little bit too. Like we're starting to see a lot of these highs of days, a lot of good rejections off of there and etc. I think that there's a lot of there's a lot of people out there that are still stuck in the whole, buying the breakout right now. And whenever you're doing that, it just hasn't been as good. You can see SPY actually faked out pretty hard today on that. And that's just one perfect example. But there's been a lot of these good rejection plays lately. So, maybe adjust your strategy there too. I know that day trading strategies can be pretty important as well. But I'll say this, Mike, the long-term accounts, at least for me, have been holding up pretty well lately. DraftKings was down a little bit today. Of course, Disney fell though, so that put a dampening in my secondary strategy, Mike.
No doubt. And then another thing worth keeping in mind is stock market opportunities are not dispersed evenly. There are some markets that are just harder to trade than other markets. And, when we have a market like we saw a couple months ago when everything was just ripping to the upside every single day in a very strong and powerful way, it's there's a lot of opportunity associated with that, and it's important to obviously strike on those opportunities when they happen. But when we have slower periods like we're seeing now, there's nothing wrong with scaling back a bit, because when you have those choppy environments, there's really just no need to risk too much capital. But either way, it's important to adapt with the market as it changes because, the best traders out there, of course, get the fundamentals right with, trading in a risk-controlled way and having continuously smart trading habits, but they're also the traders that adapt best to the ever-changing market conditions. But with that being said, Tom, let's jump right into the earnings calendar for tomorrow.
Yeah, the earnings are looking pretty good. Tomorrow morning, we actually have quite a bit. So we have Uber and Shopify tomorrow morning. Those are two pretty popular companies. Uber actually had a pretty good move this morning, I saw. So I'll definitely have my eyes on them. And I know, Mike, a lot of people have been loving Affirm over the past couple of years. And one of the biggest, if not the biggest, motor vehicle company out there, Toyota, reports tomorrow morning as well. So there's quite the lineup tomorrow morning. And in after hours, we have a huge tech stock with ARM, ticker symbol ARM. I know Airbnb, Robinhood, and AMC, even the Trade Desk will be on the radar too. But ARM, being one of those large tech stocks tomorrow, will be a huge report. And then later in the week, we actually have Sundial and MJ stock, which will be interesting, as well as Kronos on Thursday, along with Marathon, Unity, SoundHound. So we still have quite a bit left, Mike. Now, they're not as influential as Apple or Tesla or anything, but these are still pretty big companies here, especially like ARM and Toyota.
And sometimes you see the biggest moves out of the companies that are, in this mid-range, I guess you can say. Sure, they don't have the amount of hype that an Apple or Nvidia or Meta has, but at the same time, they're, respectable companies that are definitely in growth stages. So yeah, definitely keep a close eye on those ones. And I know the economic schedule for the week is pretty dead, but what's it looking like for tomorrow?
Yeah, we had Kashkari speak today. Tomorrow we're going to have Jefferson, a 10-year note auction later in the day, and then a Cook speech as well. So a couple Fed speakers tomorrow as well as that auction. Later in the week, of course, a couple more auctions and then some more Fed speakers on Friday. So definitely be ready for that, Mike. But honestly, not too much on the economic schedule like we've been saying all week, which lets us focus on the price action, with I'm totally fine with here in the short term.
Sounds great. Well, let's get right into some setups then. Stock I'm watching pretty closely is Coinbase, and it is to the downside. So this stock has been having a pretty good year, but the past couple of weeks have definitely been pretty slow, and it fell by 5.5% today, which is a decent sized move. So I'm going to continue to watch this one for a potential sell-off. Basically looking at Coinbase right now, there's a giant level at this $200 mark, but we're still pretty far away from that. So if we do see a break of around, you can say $214 a share, which is continuously bearish price action, I will definitely look at this one in a bearish way. But what's more important than anything else in terms of direction with this one is the way in which it moves. If it gaps up tomorrow and it starts uptrending, then there's no point in trying to fight those flows. It would just be a no play at that point. While on the other hand, if it opens in a weak way and it constantly puts pressure on that low of day, then the story would be different.
Yeah, that was a pretty good example today for constant pressure down. I know it had a little chop there in the morning, but once that kind of gave out, that pressure started really coming back in. That was a good move down today, Mike, and I could see it falling pretty well tomorrow. I really like that support that you mentioned around 214. I'll keep it on the radar. With my first play, I'm looking at Lockheed Martin, which is actually popping up pretty well today. in after hours so far. I see them moving up pretty well this morning as well. So if they can continue this good momentum and maybe break above 467, I will look at them up in the short term. Now, this one will be more of like a multi-day setup, guys. LMT is a pretty slow-moving stock, so don't think that this one's going to pop off like 10% in any given day. But this turnaround on the stock and the way it's starting to get bought up off the dip is looking amazing here in the short term. I really love the setup on the daily, and with the way it's keeping that pressure up here, I could see it maybe retesting like 470, 472.50 in the short term. So definitely keep watching it for more momentum. That daily chart looks awesome.
Sounds good. All right, another stock I'm watching pretty closely is Zoom, and it is to the upside. Zoom is one of those stocks that really just moves in its own way. It doesn't really follow the market overall too much, and it's still very close to some very strong support levels around $60 a share, and it has been holding those levels pretty good, and it has been moving to the upside slowly over the past couple of weeks, but it's still yet to gain that true momentum that we're ultimately looking for. But either way, I am looking at this one in a bullish way for tomorrow. But similar to the Coinbase example, I really want to see good price action more than anything else. So I want to see, as much pressure on the high of day as possible and the least amount of pullback as possible. And, assuming the stock is moving in a strong way, then there's opportunity. But if it opens up tomorrow in a weak way, there's no point in forcing something that just isn't there.
Yeah, it's been consolidating for a couple days, but I actually really like Zoom here in the short term as well, so I will keep that on the radar. With my second play, I'm looking at Apple, Mike, and we're looking at it on the book map. There's a pretty good level down here around 180 and a huge overhead resistance around 185, which it almost hit this morning and broke out at. So I'm really watching this channel between that 185 and 180 mark down there. I think that's looking pretty good here on the chart. Once we get a solid move out of this channel, I think there will be opportunity coming there. And looking at it on the book map, here we go. We have that 185 overhead resistance, 255,000 shares sitting at 185. Every stock is different on Bookmap, guys. Of course, Apple's going to have a different amount of shares at certain levels than something like Tesla or even something like ARM. So just keep that in mind. But 180 is a pretty big support down there, like I talked about. You guys can see it visually right here where those buyers are stacked. So shout out the Bookmap here. I love looking at it for these huge levels. And even for day trading intraday, looking at those big levels and where the resistance is and watching the breaks in real time is actually awesome to see. So shout out to Bookmap and the X-Ray Vision, but definitely watch that channel on Apple.
There we go. All right, well, let's jump right into today's momentum plays. And with the first one, we have Costco to the upside.
COST had a really good day today. They've been recovering up very nicely off of this dip. If they can break back above 774 tomorrow, then go ahead and look at calls. This thing has been on a runner.
All right, and with the next one, we have CGC also to the upside.
Yeah, CGC's been consolidating here in the short term, but this $9 support is actually really huge here. So if we see some good movement and good bounces off of $9 and it can re-break back above $9.60 tomorrow, then go ahead and eye up calls. That $9.60 spot's going to be pretty crucial, though. There was a couple bounces there today.
All right, and then with the last one, we have TLT for both directions.
Old Faithful, gotta love it. Yeah, it actually had a really good breakout this morning, ran up really well at market open. It did reject back down, but I'll tell you what, that initial move was great. Go ahead and make TLT break above 91.25 to the upside, right above that high of day. If it ends up pulling under $90.50, then look at puts.
All right, so we have the downside level for puts and the upside level for calls for TLT. Don't forget about the upside levels with CGC and then COST, which is Costco. But either way, looking at these three stocks for tomorrow, they are only potential day trades if they break through the levels Tom listed. We are looking for strong, consistent price action in the directions listed. But that is that for the momentum plays. So let's jump right into today's $2.3 million big money trade of the day. And it's not a Chinese stock today, don't worry. But it is with silver. So it's with ticker symbol SLV. Basically, the big money put around $2.3 million into the SLV 27 strike calls that expire way out in June of 2025. So more specifically, June 20th of 2025. SLV and silver and precious metal prices in general have been uptrending, which is good to see. As we all know, gold prices recently broke through their record highs, which also kind of helps the precious metals, grouping as a whole. But looking at SLV, these call options are no, they're not far out of the money. They're just slightly out of the money, and then given how much time they have, they're definitely not bad. But I will also say they're more of a hedge play than anything else. When you look at different stocks out there, whether it is certain Chinese stocks or certain growth-related stocks or even big tech stocks, those will move in a much different way than the price of silver will move. And that's a good thing and a bad thing. It's like when you have exposure to silver or gold or precious metals in general, they tend to be more stable, but they also tend to just like move on their own. And it really just depends on what's happening in the world at the time. So it's definitely not a bad thing to have exposure to. Just understand that it will move differently. And when you have an option that has this much time, it is good to see. So I'm excited to see how this one progresses.
Yeah, me too, Mike. And there was actually a couple other silver big money plays as well, like one that was entered at the beginning of April. So there's been a couple going on here in the shorter term, and I'm going to keep watching silver very closely here. I like this recent dip that it has, and I'm looking for it to consolidate a couple of days, kind of like it did here between like 24.68 and like 25.15. I could see it consolidating here for a couple more days and then starting to maybe fill that gap back up towards like 26 to 26.50 or even 27, up to retest that resistance. So definitely keep silver on the radar. And like you said, the events across the world definitely play a big role in this. So keep in mind, if something starts popping off again in the Middle East, like Mike said, this could be like a good hedge for a situation like that, or just a hedge against the market in general. And I really love silver here in the short term, Mike. I even almost think it's more advantageous than gold, because like whenever you look at silver, it's not necessarily making brand new all-time highs, right? Like gold is. There's still like a lot of room left on the table.
All right, there we go. But looking at the market for tomorrow, the most important thing will be, of course, to adapt, like we said, but to deploy smart, healthy, long-term, sustainable trading habits. It's easy to look at the earnings calendar for the week and say, oh, I just want to go all into Robinhood call options before earnings tomorrow. But obviously that's not a smart move to make. But instead, if you focus on the fundamental concepts like having a tight stop loss, but then also respecting it and having proper position sizing and following the money and adapting to market conditions, those will obviously do a lot better over the long term. So try to, stay away from the risky things and, deploy the smart trading habits, because that's what's going to make all the difference over the long term. But before we close out, I want to give a giant shout out to today's member of the day, SL, in the Stocked Up Discord. They had a great post with some NVIDIA put options today. So awesome job there, and keep up the great work. But also, if you guys are new to the YouTube channel, consider demolishing that subscribe button to get our videos recommended to you more often. We post all the time and cover charts and information and other important things that you need to know about the market in 20 to 25 minutes or less. And a lot of the things we talk about, you just won't find anywhere else. So consider joining the Stocked Up crew by demolishing that subscribe button. And besides that, let's make the rest of this week a great one.